Hey guys, I hope you're having a great day and welcome back to EconRecaps. Starting with the markets, we saw sell-offs in all of the major benchmarks. IWM, which is the ETF that tracks the Russell 2000, fell 1.56% today. DIA, which tracks the Dow Jones, fell 1.63%. SPY, which tracks the S&P 500, fell 1.02%, and QQQ, which tracks the NASDAQ 100, fell 1.22%. The worst sector today was financials, with State Street's financial ETF, XLF, falling 3.35%, primarily driven by sell-offs in all major banks as the market continues to digest the Blue Owl Capital news. For those of you who might have missed it, last week Blue Owl Capital halted all redemptions of one of their funds, meaning investors could no longer pull their money out. Instead, Blue Owl is selling off assets that are held in those funds and will reimburse around 30% of invested capital in the next month. The biggest hit companies from this private credit fallout are Capital One Financial, down 8.84%, American Express, down 7.20%, and of course, Blue Owl Capital, who is down over 15% in the past 5 days. However, not all companies fell today. As the market rotated out of the macro-sensitive companies like banks, they piled into consumer staples, with XLP climbing 1.23%. The biggest gainers from this sector were Kroger climbing 2.86%, Procter Gamble climbing 2.73%, and even Walmart, who seems to be reversing their poor earnings sell-off, climbing 2.29%. Looking to the news, President Donald Trump invoked Section 122 of the Trade Act of 1974 to impose temporary 10% global import tariffs after the Supreme Court struck down his earlier emergency tariff program. Within about 24 hours, he announced that the blanket tariffs would be increased to 15%, the maximum rate allowed under Section 122 for up to 150 days without new congressional authorization. Equity futures and risk assets slipped as investors digested the prospect of a 15% across-the-board tax, while major U.S. trading partners sought clarity on how new tariffs would interact with existing trade agreements. The move signals a more confrontational U.S. trade stance, using rarely tested legal authority, raising the risk of renewed trade tensions and possible retaliation beyond the initial 150-day window. Keurig Dr Pepper, yes, they merged back in July of 2018 and will be referred to as KDP going forward, said it has secured an additional $1.5 billion of equity funding to support its roughly $18 billion acquisition of Dutch coffee group JDE Peet, or Peet's Coffee as most people know it. The new capital comes from equity investments in its planned Beverage Co unit, co-led by Apollo and KKR, with participation from other long-term investors. The company now plans to finance JDE Peet's deal with about $9 billion of debt and $8.5 billion of investor funds, and continues to target closing in early April. KDP also confirmed it will no longer pursue a previously contemplated partial IPO of Beverage Co, citing the large equity commitment. In simple terms, Keurig Dr Pepper is buying Peet's Coffee in preparation for KDP to split off into two companies, with the new one being called Beverage Co. On February 20th, Anthropic launched Claude Code Security, an AI tool that scans codebases for vulnerabilities and suggests patches for human review. Available to enterprise team customers in a limited research preview, the product was built on Claude Opus 4.6 and goes beyond traditional static analysis by reasoning through how code components interact. During internal testing, the tool identified over 500 high-severity vulnerabilities, including bugs that had gone undetected for decades despite extensive expert review. The announcement triggered an immediate sell-off in cybersecurity stocks, with CrowdStrike falling 8%, Okta dropping 9.2%, and Global X Cybersecurity ETF declining 4.9% to its lowest levels since November 2023. Though CrowdStrike CEO George Kurtz publicly challenged the disruption narrative by asking Claude directly whether the tool could replace his company platform, reportedly receiving a no from the AI chatbot, the launch does mark a significant escalation and puts established cybersecurity vendors on notice. Personally, I think the markets have this all wrong. This new technology will be a positive for the cybersecurity industry, as bigger companies will be able to adopt and improve on the newly found AI tool, increasing the value add to their customers with products they can just copy instead of create. Of course, there's going to be additional R&D that goes into fixing these products and making them even better for their clients, but it's a lot easier now that it's already been invented and you just have to improve upon it than if you had to create it out of nowhere. Lastly, the U.S. Department of Justice has opened a formal antitrust investigation into Netflix's proposed $83 billion acquisition of Warner Bros. Discovery, and has sent civil investigative demands to filmmakers and producers. These third-party recipients have been ordered to provide documents and sworn testimony by March 23rd, 3 days after Warner Bros. Discovery's shareholders are scheduled to vote on whether to approve Netflix's deal recommended by the company's board. Netflix's offer, structured as an all-cash transaction for the studio and streaming assets, is competing with a hostile $108 billion all-cash bid for Warner Bros. Discovery, launched by Paramount. The Department of Justice probe is focused on whether the transaction would significantly lessen competition by increasing Netflix's bargaining power over creators and distributors, raising concerns under Section 7 of the Clayton Act and Section 2 of the Sherman Act. Investors and industry participants are going to be watching next month, eagerly waiting to see if it's regulatory scrutiny or the richer Paramount proposal that will derail or reshape Netflix's offer. Looking to the data, U.S. factory orders fell 0.7% month over month in December, breaking a strong 2.7% gain in November. The Census Bureau said new orders declined by $4.3 billion to $618 billion, marking drops in 2 of the past 3 months. Shipments improved modestly, rising 0.5% to $609 billion, and unfulfilled orders climbed 0.9% to a record $1.5 trillion. Thank you for listening, and I'll talk to you tomorrow.